Thank you for tuning in. Hopefully, you're having a good day so far. This video is for educational purposes only, not recommendation to buy, sell, or hold any stocks or securities. I may hold position in some of the equities mentioned. Know your time frame and risk tolerance. Also, if you enjoyed this video, please like and subscribe. Today's video is about pump and dump, and let me go over the concept of it really quickly. Pump and dump is basically when an individual, a group of individuals, a chat room, or a bunch of chat rooms front load a particular stock, and they might buy huge volumes into it, and then they start mentioning it to people who subscribe to these chat rooms or people or who follow these people, and sometimes these people have massive followings, sometimes in the order of thousands, and sometimes even six-figure followings. So you can assume that they have the capacity to move these stocks really fast, and it could bring in a lot of volume basically. The reason it's bad is because usually these people have bought these stocks at a fairly low price and much before the crowd. So when they try to hype it up, they start selling into the hype while other people are trying to buy it. And they're mostly out even before the stock has hit their peak. And there are a lot of people who buy the peak without really knowing it and end up bag holding because the stock sells off into multiple hauls and ends up selling off for a long time. So traders who have just entered the financial markets, they end up losing confidence. People who don't have enough day trades either end up taking a loss and end up wasting a trade, or they just completely get out of the market and make the 95% of the traders who end up losing money. Now let's get to the topic of how do you identify a pump and dump. There are a couple of ways you can identify it. Firstly, these are usually penny stocks. They're fairly low priced stocks who don't really have a whole lot of basis, or who have been traditionally penny stocks and now because of the pump they're above that penny stock level. Usually anything under $5 7 is a penny stock to me. Then these stocks usually trade with bad spreads. A spread is a difference between a bid and an ask. So if you check the level 2 for stock, you can see, for suppose the example I've opened up in front of me might have a bid of 2.9, but somebody's asking a 3.1 to sell the stock, and usually people put market orders in and buy the ask, which bumps up the price. The other way you can check it is you can see the volume is usually unusual on. So for this stock, you can see traditionally before the pump started, the volume has been like 2000, 3000, 6000, which is really nothing. It's literally nothing. But when the stock got pumped on 19th of June, the volume was 171 million. That's, I don't know how many times, like several thousand times the daily average volume. And you can clearly see that the stock spiked up real big from trading usually in a dollar level range all the way to $7, and then sold off and kept selling off for a long time. So if you bought at any of this point in the hype, you probably either got stopped out in the subsequent days or ended up bag holding and hoping that you would make that money back. If you look at the 3-minute chart on the 19th of June, you can see that the pump started pre-market, like when the market actually pre-market opened at 4 a.m. So you can clearly see it got interesting action of 66,000 shares traded in 3 minutes at 4 a.m. That's a lot. And at 4 a.m., I'm pretty sure no company releases any news. And before that, the stock was trading at a dollar level. I'm pretty sure you don't get enough news at 4 a.m. And the stock then sold off because it was a pump and dump. People sold into the pump who bought the day before. And then you can see it open, got pumped again, got dumped, then got pumped again, and kept selling off the rest of the day and has never reached these levels again. So you can, one way to identify is usually there is a bell-shaped curve. You can see it's a bell-shaped curve, and it pumps up and pumps down immediately. There's unusual amount of volume in the stock. You can look at their daily average volume, and you will see that that particular day the stock is really unusual volume. The other way you can see is you can check the news on the stock and see if there's any basis behind this move. Sometimes the stock can get pumped on legitimate news like a drug approval by the FDA, or signing of a huge contract with a FANG company, or contracts with the government or something. And you can buy into those because those stocks will tend to run throughout the day and you can buy into those. But stocks that usually don't have much news are the ones that usually get dumped the hardest. The other thing you can check is that these stocks usually end up spiking up and down on halts. So it will get halted up, due to volatility halts. They usually start with 5 minute halts and then it can go up and it can halt on the way down, which makes them really dangerous. The other thing you can do is you can go to finviz.com, search the ticker, and you can look at the float. So for this stock, the float is 5.4 million. That's all the shares needed to trade the entire float of the stock. So on a day when the stocks float, a $5 million stock trades with $171 million shares, you can assume how many times the float got rotated and how fast the price movements have been. It's really difficult to stay on the right side of the price movement if you didn't get a good entry on this particular stock on that day. You check the news. I don't see any significant news between June 15th to July 1st, and the pump happened on the 19th of June. To me, it's a clear red indication. Then you can also go to a website called stocktwits.com. You can see the sentiment of the stock, and you can see when the pump was going on, there was all bullish sentiment on the stock, and before that there was no bullish sentiment. You can see the message volume start spiking up after the first pump because people who missed that first pump started trying to pump it more because the stock sold off. The stock opened up at $3.78, traded all the way to $7.21, and then closed off at $3.36. So the stock closed red. So a lot of people probably after the 21st of June tried to pump the stock up by mentioning rockets and all that, whatever, like making rocket emojis and whatnot, tried to pump it up, and the message volume kept going up, hoping that they would get the pump back in so they can get out and exit. But it never happened. There was a slight pump the following day, but it was not sufficient. You can see there was a low pump, but then it got sold off the whole day. So again, this is something that I'm usually not a fan of. This is a practice I don't indulge in, nor I encourage anyone to participate. But it's at the end of the day, your money, your decision. I am just providing education here. I'm not trying to advise you. You might already be in the sticker right now while you're watching this video, and you might not like what I'm saying. But again, it's your money, it's your risk management, and you guys are completely responsible for how you trade equities and manage your portfolio and positions. Hopefully, this video has been uh, educational enough for you guys to make educated decisions in the future. Let me know if you have any questions, leave it in the comments, and I'll try my best to respond. Thank you. Have a good rest of your day.